back to the Stablecoin podcast. This is Luther and Rami. We're co-founders of Stablecoin Partners. Our guest today is Christopher Perkins, President and Managing Partner at CoinFund. Today, we're talking about the stablecoin infrastructure era, what it actually takes for digital dollars to become the plumbing of global finance, why security is the biggest risk most people are underestimating, and what TradFi's entry into the space really means for builders and investors. Before we get started, a quick disclaimer. The opinions expressed here are those of the hosts and the guests and do not represent the views of their employers or affiliated organizations. This conversation is for educational purposes only and should not be taken as legal, financial, or investment advice. And with that, Christopher, welcome to the show, sir.
Hey, thanks for having me, Luther and Rami. Good to see you guys.
Absolutely. Before we get started, thank you so much for your service. From the bottom of our hearts.
Just wanted to extend my wishes and hoping Rami, you and Darren Abu Dhabi, all the best to you and your family. I hope everyone stays safe.
No, very kind. Thank you, man. Much appreciated.
Chris, I think you and Rami crossed paths back in the city world. Would love to get your journey from city, managing trillions in flows to the wonderful world of digital assets that we've all come to love and use today.
Yeah, got my start as a U.S. Marine, and I was in the Battle of Ramadi 2004, which is a pretty difficult urban combat. My unit faced a number of different casualties in KIA. It gave me an incredible appreciation of risk management, and really armed me with a special perspective about life. Transitioned there, and I went to Lehman Brothers. And like Bitcoin, that emerged as a phoenix out of the global financial crisis. I mean, I was in the depths. I was in the trading desk at Lehman Brothers when we went down. I was running a derivatives book, about $100 billion in notional. And I gained a real appreciation for how markets work, how market structure works, how insolvencies work, and really, really understood the flaws of the existing system. Got a call from Citigroup the next day. They asked me if I wanted a job. I said, yeah. They're like, what kind of package do you have? They said it was a great package. It's a job. Talked to my wife who was in mortgages and pregnant. And she's like, dude, get down there and start. And I took the C train down and showed up. It was mayhem. And wouldn't you know it, all of my trades were gone because I was at Lehman. So I was the other side of the trade. So I had to hedge that book back out, my own trades. It was so weird. And then Dodd-Frank was passed and the regulators, went crazy. And they really thought, gosh, this derivative stuff's out of control. We need to regulate it. And in the US, we had Dodd-Frank, but even before that, it was an issue for the G20 itself. They're like, the global financial markets are intertwined. We really need to have common standards. And maybe we're even seeing some of this interconnectedness with the Strait of Hormuz right now, just how connected global markets are. And so we ended up passing this global derivatives reform. In the U.S., it was known as Dodd-Frank, where we had to take the $700 trillion derivatives industry from unregulated over to regulated. You'll start seeing how this is starting to rhyme with crypto. I stepped up and led the clearing business, so we had to start clearing these swaps. And it was really interesting because at the time, we didn't have technology. The only way we could solve this is by increasing centralization, increasing intermediaries. And what we did was we regulated the hell out of the central clearing counterparty. So we centralized all derivatives, we put all this collateral in it, and then we just stared and watched them to make sure they didn't get out of control. And so the solution at the time was extreme centralization. We didn't have decentralization as an option because, Bitcoin was just getting born, right? Ended up running two other businesses at Citigroup. I took over our foreign exchange prime brokerage business. After there was a big crisis, the board parachuted me in. And there I learned an appreciation for the FX markets, which we're going to talk about today. These are $7.5 trillion a day markets. They're actually largely unregulated when you start understanding those markets, and they're pretty decentralized. In fact, no government really wanted someone to regulate its currency. Somebody else really. So the market came up with a code of ethics, if you will, the FX code, right? So they try to keep norms, knitting market. Again, that rhymed a little bit with crypto. And then last job I had was I ran a global futures business. So I had about 725 direct and indirect reports, electronic and voice execution and clearing. So I was running those three businesses. I'd gotten into crypto years prior. actually sat next to a lady named Sandy Call, who a lot of people know from Franklin Templeton. She's a futurist, and we used to start talking through just how big a deal this technology was. And, in the beginning it was like all about settlements. Like, wow, I'm like sitting in the middle of these, like literally billions of dollars of collateral flow for my businesses. And I'd be scared to death because if those flows were coming in from Japan, I'd have to settle out one side. I'd have to wait for the yen to come in. And I was an intermediary. So I was taking all this, what we call Herstat risk, which is like settlement risk on collateral. And I didn't like it. And I'm like, wow, I can just start settling this stuff. It's going to be insane. So try to get it off the ground at the bank. The bank wasn't ready. And we're talking, this is like 2014, something like that. Like they just weren't ready. And then eventually, I just got so obsessed. I just walked out the door. And I joined CoinFund. I've been the president there for about 4.5 years. One of the managing partners. We have seed, venture, and liquid strategies. And so really I've had a chance to really immerse myself in this entire industry. I serve as a member of the Global Markets Advisory Committee for the CFTC, and I'm on the Digital Asset Market Subcommittee. And last thing is we've announced that we're going to be spinning out of CoinFund, so I'm very excited to make some big announcements here in the coming days.
Wow. What a journey. No, it's fantastic to listen. And yeah, I remember certainly from being at Citibank, from the FX prime brokerage time before you joined in, I sort of remember that previous life. And certainly for me, settlement was a problem because we were actually sort of dealing with effectively margin brokers and hedge funds who needed to, how do you get a margin call over on a weekend? You can't. If there's a problem on a Friday, there was I think, Japanese flash crash or something in 2010 or 2011, and suddenly you've got all these people on margin call, can't do anything with it. So certainly that was one of the things that attracted me to stablecoins, a 24/7 settlement instrument that can move, outside banking hours. That was a game changer for me, and agreed with Herstat risk, FX on chain. Why can't this happen? So really resonates.
There's a couple of things that you mentioned that really we should talk about. The first is just the amount of capital that's trapped in the system right now. And the reason it's trapped is because when you have this settlement latency, right, you have to hold collateral against it. And so, for example, in the $500 trillion swaps market, we require a minimum of a 5-day margin. Or if it's not cleared, we require 10 days of margin. Why? Because you have to plan for the fact that this stuff isn't settling. So you have to hold a lot of extra collateral. And that is just a big liquidity drain on the entire system because that collateral just sits there, right? And so one of the other great unlocks that we haven't achieved yet across markets is the liberation of collateral. Because if you could settle things instantly, why do you have to hold 10 days of risk? Now, maybe there's some underlying liquidity issues in the underlying portfolio you're trying to hedge, but you're going to be collateralized that much faster. So it's not a panacea, but it does unlock capital. And then I think, Rami, it's important to mention, you mentioned Herstat risk. I mentioned it just for the listeners, what that means. In 1974, there was a bank. It was called Herstat. And they had an issue because they had some liabilities due, and they had some receivables coming in, and they couldn't pay the liabilities fast enough because the receivables were delayed. That settlement risk led to their insolvency, which really kicked off a lot of the Basel rules and everything else. But because you have that quote settlement risk, it's now deemed Herstat risk for the people that like you and me that think that we're smart. Like, yeah, Herstat risk sounds smart, but it's just settlement risk.
True. It's just settlement risk. But what you mentioned though before is actually really important. So what you're saying is through the technology innovations that are coming in now, the risk component is decoupled from the infrastructure and technological constraints of the system. So, now a risk manager can say, yeah, I do want 2 days margin because of the risk, not because the system takes 8 days and, we need 2 days. I've got 10 days risk and that's how much capital. That's the difference now, which, technology allows us to actually price risk accordingly and ask for the relevant collateral for risk accordingly. I think that's a major innovation. 100%.
Think of it differently. It's like a tax because of your ineptitude to settle on a timely basis, right? Like it's a crappy infrastructure tax. You guys, you're going to take 3 or 4 days to settle your yen because it's a long weekend. Well,
Yeah.
tough. You're going to have to hold collateral. That's your tax. And my point is that that capital right now is trapped. It's just sitting there. It's not productive. It's helping nobody. Like, and we'll talk about interest, I'm sure. Like, maybe you're making a couple of basis points of interest, but like some intermediary is taking it all anyway. So it's just a waste.
It's
Yeah.
crazy how,
Agreed.
this concept of stuck collateral. So my background is predominantly from a payments perspective, Chris, and this shows up everywhere, right? So in the world of remittances, this is basically called pre-funding, right? So every
Yep.
remittance company out there has to hold pre-funds because of the fact that you couldn't trust the other party that they would ultimately settle, and even if you did, you didn't want to hold the bag for $30 million on a Monday. When you woke up on a Monday for everything that you settled, and in your case, it's trillions, but it's slightly smaller, but the concept is exactly the same. And it's crazy how it's something that is a result of poor plumbing ultimately this whole time. But that being
Yep.
said, so on-chain effects, right? Like we've talked about this on the show before. I would have really thought that on-chain effects would have been at a 10x where we are right now, and there would be a plethora of non-US stable coins out there to kind of set this whole on-chain effects rolling at the speed we expect it to be. What are your thoughts on why we're not there yet?
Yeah. I mean, I've had the same thesis for a long time, and it's important that you continually challenge your own theses and be like,
Hmm.
why hasn't this happened? Like, it seems so obvious to me. And one of the first things that I learned when I moved crypto full time is that I have to unlearn a lot of things. And the fact is that for a number of different reasons, we are just not seeing the demand for FX, non-US dollar
Yeah.
stablecoins.
Yeah.
I think in many cases, it's because governments got their policies wrong.
Hmm.
I think MiCA was a challenged regulation. It's very hard to run a profitable Euro stablecoin
Yeah.
company, particularly with some of the capital rules that make you reserve in a low yielding environment. So like, I think some of it was their own doing, but I think the greater reason why we haven't seen, just all these different FX um, stable coins emerge is really for one reason. It's that the globe has this insatiable desire and demand and lust for US dollars. You just can't get around it. I was speaking to a kid at a university. I presented at a panel. Kid from Libya showed up, and he's like, "Thank God for U.S. stablecoins. Like, they've saved me so much money. They've allowed me to become educated." If you run around the developing world, and by the way, I think you're going to see a lot of conflict going forward
Mm.
between governments and their people. Governments have a reason to perpetuate their currency. It's, if you're in charge, it's something you can control. It's part of your policy. It's very, very difficult to do, but it's a way that you can, help, I guess, assert control over a population, particularly if you have capital controls and things like that. But when you take it to the people, I don't know about you guys, but I continue to see insatiable demand for US dollars, frankly, as a store of value,
Hmm.
which is
Yeah.
different than the US. In the US, we have, we're spoiled. We have access to everything, but in the developing world, if you don't have the trust of bank institutions, governments, etc., you want that dollar as a store of value, as a material part of your portfolio. The interest question is a good one. Can you generate some interest in DeFi? For sure, you can do that. No one's going to stop you. Is it a little risky? Maybe. I think in time it's going to be, I think it'll be very obvious how to generate very safe interest on your stables. But I just don't see that insatiable demand for people around the world, in the developing world especially, for those dollars. It's just everywhere I look, no matter how hard the governments try, people want more.
If you
Yeah.
if you kind of divided the ecosystem in every country into there's people, there's institutions, and then there's the government, right? If you kind of looked at it from that perspective, do you see the same level of demand across those three things? And I'm asking this because recently we just saw Japan sell a bunch of treasury bills, a bunch of US treasury bills, right? So how would you kind of classify the demand in those kind of three strata of the society, I guess?
So I think as a store of value right now, there's exceptional demand amongst the people, amongst retail.
Hmm.
Yeah.
I think that demand as a store value, I think that demand will increase as they're able to use that asset for as a means of exchange for local goods and services. So in certain jurisdictions like Argentina, whatever, you can start paying in Tether, and vendors accept Tether. As that last mile comes together, it'll move past just a store of value and it'll become a de facto retail currency. So I see that demand ever increasing. On the institutional level, to the extent you're an international, multinational corporation, dollar becomes the medium of exchange that's most likely, and that you're going to need scalable assets in. Government's a different story, and I can see extreme cases in the future where there are folks in power in a developing world. Maybe they're not the best folks. They don't govern so great. They try to keep that local currency in. They're challenged by someone who wants to take control. That person, really adopts the dollar to be funded. And then ultimately, I do think there's a situation where you're going to see increasing dollarization of the world. And that's just how it is. I don't know if it's a good thing or a bad thing, but I think it's going to be hard to roll back, despite the fact that many governments are trying to de-dollarize. So you're seeing right now in Iran is receiving payment in yuan for oil. And I think you'll see more of that activity as people try to decouple. But under the surface, I think that demand for the dollar continues to grow.
Yeah, look, I definitely concur with most of that. I think from Argentina to Syria to anywhere where there's a major remittance corridor combined with an unbanked population, combined with a devaluing currency. Look at the currencies that are devalued, whether it's Egypt or Pakistan, Syria, any of these kind of countries versus the dollar have all devalued or Lebanon, up to 95% over the last 10 years. So store of value, absolute. Who cares about the interest yield of 3 or 4% if you've actually lost 95%? And it does. Yeah. It's de minimis. It doesn't make any difference. So
or US dollar inflation, right? Like who cares, right?
It doesn't matter. It doesn't matter. We're not saying that the dollar is the best currency. It's just the best in the absence when compared to everything else. It's just like
it's like Churchill, right?
Democracy is the best in the absence of all other. I
don't have any other choices. It has the most utility. It's the greatest store of value. Could that change in time? Yeah, and I think what people are saying is like, well, wait a second. I don't know if I can trust the dollar. Like, it's better than everything else, but where do I go? And I think that's why you're seeing people buying gold. That's why you're seeing people buying Bitcoin.
Yeah,
I think what we saw in this last cycle was the government at that strategic level, the government level. They said, you know what? I don't like this dollar thing, so I'm going to decouple. Yeah. Donald Trump's upsetting me. He's, all about Donald Trump. So I'm going to decouple and I'm going to buy gold. And you saw Tether buy gold. Yeah. What happened is that you saw a decoupling of gold versus Bitcoin, and I think it shook some confidence in some of the Bitcoin believers. But why is that? Because the government's not going to buy Bitcoin. These guys are like 70 years old. It's not going to happen. So I think you're going to see that catch up. But I think it's very conventional to think that, yes, the dollar is going to have a much bigger prominence in the world. And then how does the dollar stay honest? Well, that's where Bitcoin and maybe gold come in as well as two assets that keep it honest, and commodities, frankly, keep the dollar honest. So, and I think we've heard that from senior policymakers, and I think that's the future. I don't see how that's going to change anytime soon.
We talked about the insatiable need for the dollar and how stablecoins have really kind of put that insatiable. It's like demand meets supply, right? Like there was a ton of demand for US dollars, and then US dollar stablecoins came out, and suddenly there was a supply for people to kind of get access to dollars a lot easier. And then something else you mentioned earlier was one thing that you really recognize is decentralization aspect of blockchain when it comes to that. The backdrop for this is that still with all this, 93% of all US dollar stablecoin supply is through USDC or USDT, which is basically a centralized mechanism at that point. Does that concern you from a risk perspective?
Yeah. One other thing that I wanted to mention before we get into the centralization issue is that I think there is a frontier global currency emerging beyond gold and beyond Bitcoin. And it sounds a little bit weird, but I think it's true. I think it's going to be standardized compute. Because as AI agents start coming into the fold, yes, they're going to pay with dollars, and that's going to be great. But what is the commodity of choice that they really want? It's going to be like compute. I think it's going to be, which is a derivative of energy as well. So you have Bitcoin, which is a derivative of energy. You have compute, which is a derivative of energy. So I see that as another commodity that could be a medium of exchange, particularly as the agentic economy takes hold. But let's get to your centralized point. It's a big issue, and I got into I don't know if you guys know Austin Campbell. Like, we've been at odds a little bit over
we're
like his thesis, and he's like, smart contracts, you can't have them on a decentralized open system. And I'm like, dude, you're out of your mind, professor. No, I disagree. But
We'll have to get
long story short, let's talk about what it means. Any centralized company that issues a stablecoin will be subject to regulation and sanctions and OFAC. And I don't think that's a bad thing. And wherever you pop up, and in whatever jurisdiction, you're going to be subject to the local government where you exist. What does that mean? That means I think you can be free to use any public blockchain, any permissionless blockchain. And I don't think that those public decentralized blockchains should be held accountable for your behaviors. I see like decentralized blockchains as like the new internet, and like bad guys use the internet all the time, but we don't like attack the internet. We go after the bad guys. And so you will always have that degree of centralization for regulated stablecoins. I mean, we could talk about like algorithmic ones, which are more complex, and that's why people are trying to solve for a decentralized stablecoin. I mean, that's like the holy grail. No one's been able to do it. That's what makes Bitcoin special. Is it's a decentralized store of value. Is it achievable in stablecoins? I don't know. I haven't seen it yet. We'll see. Maybe in the future something happens. But the issue that you always have when you have this idea of freeze and seize, where if that stablecoin gets into the wrong hands, what do you do about it? Well, the great news about blockchains is you can kind of track where it's going. It gets into a bad wallet. You can freeze those assets, those hard assets, and burn the tokens. It's called freeze and seize. But the problem that you have, and by the way, this applies to equities as well, or anything else that you put on chain. The problem that you have is latency, because right now, you can't just like wake up and freeze and seize. You have to go through due process. And if you get away from that, then it undermines, any asset. If any government can just wake up and shut you down, then it doesn't work. There needs to be due process. And I think that's why around the globe, there's this desire for dollar stable coins, because there's a rule of law. They know that you'll have to go through due process before you freeze my tokens. But latency is the problem. And here's why. Because as you're going through that due process, and you're a bad guy, you can take seizure of those securities, even if the transfer agent knows that you're bad. And then if you move very quickly, you bridge that over to Bitcoin and you get out of town. That's a huge problem, because now somebody's going to get screwed somewhere. If it was hacked, who's holding the bag? So the latency problem hasn't been solved. I mean, I have some ideas on how to mitigate it. It's impossible to perfectly solve. But yeah, I do see the world where we're going to have centralized assets sitting on decentralized chains in the future.
Yeah. I can resonate with that. Is when I was at GMO, the NYDFS stablecoin issuer, and we had incidents where we had to do freeze and seize. I mean, we issued on multiple blockchains. It was part of the NYDFS approach approval process that you're able to freeze and seize assets and burn tokens and so on. So we had to demonstrate we could do that on that. And we had a couple of incidents where the latency of the investigation cost the ability to freeze as quickly as we would like to. Anything that can sort of automate or speed up that kind of process, even though we could see, but once it goes into a mixer, and you have the tools, you've got that visibility from TRM or Chainalysis, whoever you're using, but once it goes in there, it's lost, and you've lost the ability to mitigate your loss there.
Yeah, I think there's two ways to do it. You can freeze and seize, or you can theoretically roll back the chain, which we've seen people do. Now, the question on rolling back the chain is, if you can roll back the chain, you're probably not decentralized. And so if you can do it, you probably should do it. If you can't do it, then you can't do it. And so,
Mm.
I think it's impossible in certain chains to get to roll back. So that's the other thing to think through.
We're starting to see definitely an increased adoption of privacy. Our last guest from Zama kind of did a really good job of talking about that. But what are your thoughts on how digital assets are kind of migrating back to what we are used to in the traditional in the TradFi world, which is like, hey, there needs to be some privacy here. I don't want really anybody to know that I'm sending out, X amount in paychecks every month, or I don't want anybody to find out how much treasury I'm moving between various parts of my company. Like, we're starting to see that come back, right? So Canton is on the rise. You got Alio, et cetera, with ZK proof enabled chains. What are your thoughts on this privacy piece?
In the past, we've all lived it, guys. Like, certain members of governments get freaked out when there's privacy, but privacy should be the norm, not the exception.
Yeah.
So I think for institutions, you can't nobody wants to broadcast everything they do financially to other people. It doesn't make sense. So I think it's table stakes. That doesn't mean that, people always go directly to nefarious behaviors and be like, oh, if there's privacy, then something bad is going to happen. That's not the truth. Like, should mixers be illegal, or should the people who used mixers for bad things be held accountable? It's the latter, right?
Yeah.
Like you need to go after behaviors and activities. The act of having pride in privacy and like needing privacy, that's a human right. So, again, when we think about regulation, we think about principles-based approaches. There is no principle that is violated if you're pursuing privacy. So I think you're going to see more of them. You saw an explosion after this administration turned over, because it's like the natural state returns where, hey, the U.S. is again focused on innovation. The U.S. is again, wanting to be a leader in technology. Of course, that's why privacy had a big run when you look at what happened with Zcash and others, because it's like, duh, like, of course we need this, and it's not a crime to be private.
Yeah, absolutely. And actually what you mentioned resonates with what you said earlier. In FX, it's an unregulated world, but we had the FX Global Code of Conduct, which the ACI, which I'm part of that, and the Digital Asset Committee there, they were responsible for making sure that the institutions around the world signed up to it. So even though we're in an unregulated space, best practices around financial innovation were adhered to. And that sort of rhymes with certainly what we've been doing at Stablecoin Standard around sort of codifying standards for the industry. And actually we just released a DeFi stablecoin framework, again, to try and just not so much codify, but at least set out some best practices for the industry that could be implemented.
Yeah. So like, if you're a stablecoin issuer and you are issuing a stablecoin to an individual institution, you need to know who they are. And you can't violate laws by transferring, by affecting that transaction. I've got no problem with that. And then if they're going to move assets to somebody else, then they have the obligation to not to send it to terrorists, or they'll be held accountable. So for some reason, we go after the technology in this space rather than the behaviors of the people who use it.
Which is
Correct.
a little bit different than how banking, et cetera, has been kind of treated in the past, right? And I think part of it is just because of the initial association between blockchain and nefarious activities. Like, so we've never really shaken that off. But that brings me to my next question, Chris, which is around the Genius Act, right? So go ahead.
But I don't know if I agree with that, Luther. I don't know if I agree with that, because in the past you had banks that created technology. So it was a vertical, it was a centralized model. Yeah. I'm a company, I'm building technology to do something. Yeah. Should that company be held accountable? 100%. But if you have a decentralized technology that's building, that allows, like, it's like a new internet. Like, when people use the internet, I keep saying this, we don't go after the internet. Like, maybe China does, because, they're wired differently than us. But like, so if you have a protocol that's decentralized and someone's using it, it's not like it's the protocol that's controlling it. It's decentralized. So like, the onus is back on those people that use the technology.
Yeah, and I think also, Luther, the issue is not it's the transparency of the technology has highlighted how little poor activity is being done. It's all out in the open now because it's all transparent. It's all on the blockchain. You can see these things. So it was easier to hide nefarious activity when it's all spreadsheets. We only have to go back to Bearings or any failures of many banks or KYC failures or, money laundering that's happened in major institutions. We can go down the list of all the bulge bracket banks that have paid AML KYC fines because of failure to adhere to basic KYC principles. So here, the technology is just putting it all out in the open. That's why I think people are having a go at the technology, because the technology is actually, it's shining light where it was difficult, where people were doing stuff.
Have you guys ever gone on the OFAC website? Like, you don't even have to now with with AI. Just say, hey, tell me about the largest sanctions violations in history. And guess what? Bitcoin, like crypto doesn't really pop up so much. It's those banks over and over again. It's really everyone should do it. Be like, and you're like, oh my God, really? Why didn't those CEOs go in jail with those billions of dollars that they laundered through their bank? It's pretty enlightening.
Yeah, it's a good point. It's a really good point. Given where we are in the market right now, right? We've got all this conflict going on in the Middle East. The markets are kind of weird. I've never personally seen this, and I maybe would love your thoughts on this, where gold is down, stock markets are up and down, right? Crypto is up and down on any given day. Quite a bit of churn. What are you hearing from people, and where you're saying people just don't get it? What is your thoughts on something like that, like your contrarian view on this?
Yeah. So the one thing, when you look at the geopolitical macro landscape, I mean, we're in a period of max uncertainty, but there are a few things that are actually certain. When you think through an international relations lens, there are different schools of thought. There's idealism and then there's realpolitik. We're in the era of maximum realpolitik, where states are acting in their own interests. I mean, Donald Trump doesn't even hide it. America first, right? Anything I'm doing is in my own interests. Whereas in the past, our goal is to create democracy in Iran for the Iranian people. That's an idealist approach to international relations. That's not his case. He's like, I want stability. I want Strait of Hormuz open. I want their oil, right? Very much a realpolitik world. When you are in this environment, what are you seeing? You're seeing more trustless, permissionless behaviors that emerge. It feeds right into crypto. It's going to drive demand for stablecoins, right? Because everything is decoupling. Again, at the government level, people are saying, you know what, I want out of the dollar. They can't do it because the people want it, right? And so this is where what we believe in, this trustless, permissionless crypto environment, it's all kind of coming together. Now, near term, we're seeing a lot of volatility. Expect that. It's a frontier risk asset. We can go through how fundamentals continue to matter, but at the end of the day, the thesis is holding true. There continues to be a breakdown in trust in global institutions, et cetera. So, gosh, why wouldn't you want to hold the keys and hold your crypto and have less reliance on intermediaries that you have no control? So that major thesis is playing out exactly as many of us expected. And then look, as far as overall price action goes, all eyes are on the Strait of Hormuz right now. That has to get resolved before the economy is ready to go forward. I think it has to. Status quo does not work for anybody. And so we have to be in a position where there's freedom of navigation on that strait. I was a naval officer who studied it for many years. I'm hopeful that it gets resolved quickly. But Rami, you're there in the UAE. U.S. can go home, but you can't go home. Like you're in that neighborhood. The Gulf states are living in that neighborhood. The status quo is not working. Israel can't go back to doing what it wanted to do. And we can't just say, hey, we're done. This has to be resolved. And once it gets resolved, it may take a long time, but I think hopefully the world will be in a better place. And crypto has shown a lot of resilience through this, a lot of resilience. So I think it's well positioned as we come out. As the world is rewiring, they're seeing that crypto stablecoins solve for a lot of the issues that we're seeing. So I'm maximally bulled up medium term.
I'll definitely resonate with that. I do think, the UAE in particular and the Gulf states in general had definitely done a great job pretending to the world that they didn't exist in a conflict zone in the Middle East, and sort of Dubai was sort of shown as that bubble of, a safe haven, even though, it's 100, 200 miles from Iran and so on, and no one really noticed until they got airdropped out. So I think it's that perception of sort of safety in the middle of a geopolitical conflict zone has been pierced, but I think it'll come back. I think they've done extremely well in terms of dealing with this. And, as I said before we started this call, it's pretty much business as normal in the region to an extent. We're trying to continue. One thing I did have a question for you, actually, Chris, was in terms of, you mentioned sort of compute might be the currency of the future. And I wanted to sort of double down just briefly on that around, I know that here there's been a lot of investment in AI. And last, when we spoke to our guest recently around compute and quantum stablecoins
Yep.
and so on, what are your thoughts on sort of the conversions of these things, the agent economy, X402, quantum? How's it all going to play out?
We haven't seen X402 take off yet in a material way. I think the groundwork has been set. I think it's overhyped for now, but I think in the medium term it's going to come out. I think quantum is going to, it's coming. Like we saw a report by Google last night that was published. But the good news about crypto is that this is what we do for a living, right? So if this industry doesn't get in front of it, which industry will, this industry is going to get out in front of it. And so I think it's going to unlock. And when you look at these technologies together, crypto, AI, quantum, AI will accelerate both. You can't have AI without crypto. And once you have that compute of quantum, like, oh my God, it's going to be awesome.
Yeah, spot on, Chris. I really think that with the way that quantum computing is progressing, and in parallel, the way that AI is also progressing, I mean, every day there's something new in AI. The combination of those two things and using digital assets and blockchain is a killer combination. What do you think, Rami?
Yeah, it's that beautiful Venn diagram, isn't it? So I think everything's converging, and ultimately they will drive each other to more innovation.
Hey, Chris, it was wonderful having you on the show. Where can people find you?
Thank you so much, guys, for having me on. I'm available on Twitter, Perkins, CR97, also LinkedIn, Christopher Perkins. Really, really appreciate it, fellas. Thank you.
Thank you. Good to see you. It was a pleasure speaking with Chris. Really, really fascinating chat and very pertinent, given his naval experience, given the current situation. But as you saw, he was very bullish, medium-term bullish, and I think we should all be bullish off the back of what's happening at the moment. Please make sure you like and subscribe for the latest episodes, and if you found value, share it with a treasury professional, fintech founder, or anyone building at the intersection of traditional and digital finance in your network. Stay safe.